Welcome to the Trading with Venus podcast, where we help you establish strong trading habits, generate consistent profits, and create the lifestyle you desire for yourself and your family. Now your host, Raman Gill.
Welcome to the Trading with Venus podcast, episode 6. Today I have the honor and pleasure of welcoming a very special guest on the show who is not only one of the best price action traders that I know, but my mentor as well. Chris Lowry is a registered CTA and a fund manager. Chris has been trading Forex for over 16 years and manages funds on behalf of both private and institutional clients. Prior to his trading career, Chris was a decorated Olympian. He competed in 4 Olympic Games and won the overall World Cup title in the sport of bobsledding. Chris totaled 9 Crystal Globes and accumulated 22 World Cup medals during his career. Today, Chris shares with us how his childhood as well as his athletic experience shaped his trading journey. Thank you so much, Chris, for joining us today. We are really looking forward to hearing your story and your trading journey.
Ramon, thanks for having me. Appreciate it.
Okay, so let's dive in. Can you tell us a bit about yourself? Because we'd really like to get to know you personally.
I guess if I start out, let's say, a childhood, because I think that some of the way in which I was brought up perhaps has contributed to sort of the direction that I wanted to take in life after I was finished sport. So I grew up in a family with 8 kids, and we're all years-wise, we're all very, very close together. And there was twins that came a year and a half after me, so I had to fend for myself from the time I was a year and a half. So just let me do my thing, let me mind my own business and take care of myself. Anyway, so it was really interesting, and got amazing parents, and my dad is amazing. And I think that when we were growing up, obviously with 8 kids, you have to run a pretty tight ship. And when we were growing up, my father always taught us financial prudence. So the way in which they did it, of course, is growing up in that kind of a family, we were like a machine, and everyone had to play their part, and we had our responsibilities. And we couldn't deviate away, because my mom is like, she's an iron-fisted German. So we were brought up kind of with discipline, and I wouldn't change anything about how I was raised, but we were taught to work hard, take responsibility for our actions, take on responsibilities. And from the time we were about 11, we basically had to go out and work, and we didn't. And I realized that the circumstances and the environment and the culture was different back then, where we were never, ever given any money to go buy something or do something. Yeah, they paid our sports fees and whatnot, but if we wanted anything, we had to finance a certain percentage of it, depending on how old we were. And from the time we were 11 or so, we had to go out and try to find work for ourselves. So, and we never ever were paid an allowance and paid for anything we did around the house at all, ever. And believe me, my dad had a lot of work for us to do. So we had to, first of all, figure out how we were going to go out and make money. And the desire to work and make money was inspired by the fact that we might want something like a certain type of bike. For example, we would have had to finance a certain percentage based on how old we were, and that's if we were not going to settle for the hand-me-down. So this whole sort of mindset really, obviously we were forced into it, but it all made sense. So you're trained to think a certain way from the time you're quite young, and then to you that's just the way life is. And I realized that, on a global comparison, my circumstances were still very, very privileged, in the culture we grew up in Canada and whatnot, when you look at some of the circumstances that people are raised and live in other parts of the world. But so I think that whole mindset really set me up for the future. Then when I got into sport, the sport of bobsledding, and I realize a lot of listeners don't really even know what bobsledding is, and unless you're from, just a core Western nation. But the sport of bobsleigh, when you consider the equipment, all of the aspects of equipment, the costs of equipment, the athletes, the dynamics on the team, having to train physically for strength and for speed and psychologically, it's an enormous, enormous amount of work. And it was a full-time job for me. And it was so much work. I always thought that when I get out of bobsledding, whatever it is that I do is going to be a lot easier. And so, in other words, you're just used to that kind of workload in all aspects, like I say, mentally, physically, and planning and intelligence, and you're just used to that kind of workload, and so you just think that that's just how you position you put yourself into and what you expect of yourself. Whereas other people, perhaps, some people self-inspired, they will take on whatever workload they need to get the job done, while others are not willing to do so, and it could be a result of their environment or not. Anyway, that's kind of my background, and I'm older now, and so I like to take it easy more. You look around you, and you just kind of think everybody else thinks or operates like you, but they don't, because everybody comes from a different set of circumstances. Whatever circumstances you were raised in, or the experiences that you've acquired over time, you can still obviously convert that into successful trading if you're really willing to do what's necessary. So that's just sort of some of my background, and I really wouldn't change anything.
So how did you go from bobsledding to trading?
From the time I was 17 or 18, 19, my dad was always talking about the financial space. He led Ford Motor Company in the engine division, and was basically in charge of the entire engine division. He'd always come home, and our dinner table conversations were often around manufacturing, process thinking, processes, and also about certain financial stuff. And you're never a prophet in your own town, and so my dad probably got the least amount of respect from his own kids. But anyway, I listened, and then he started handing me off periodicals and got me interested in mutual funds. At that time, there's a mutual fund craze and stocks and things like that. So I started to watch stocks, and then when I got into bobsledding, because I previously did decathlon. I did track and field, and then I converted into bobsledding when I was 21. And when I got into bobsledding, I thought, okay, I'll go for the 88 Olympic Games and go from there. And so, but I was always studying. So I finished university in the interim before my first Olympic Games. And then after my first Olympic Games, I took the Canadian Securities course just to get a more in-depth understanding of the financial space and sort of explore where my area of interest was. And then I started looking at potentially working with some of the investment houses, but more in at the time they called it a stockbroker. And I'm just not very good at sales, and I was more interested in the trading. So I just was obviously observing the trading space more heavily. So then I decided to continue bobsledding, and after we became world champions, it became more of a business. Well, I mean, it always was really a business, but on a very small level, until we really started to move up and win medals. Started winning World Cup medals, and so it really became an overall business that really consumed all of my time. So anyway, just kept on chasing that one till I was like 35. But in the meantime, I was always studying and preparing, ready to head out into the financial space. Then when I retired, it was in 1998, so just the last couple of years of the technology boom. I was trading some stocks, and I was not doing well really at all. But I enjoyed it. I had no framework. It was very, very randomized. There's so much in front of you in the equities space that you just don't even know what direction to take. And so I was confused, had no grip on any process, any structure, any framework, and I was losing. So then I turned to FX.
In the Forex, when you started trading, was there a time when you actually felt like you failed in that, or did that come naturally to you?
Well, I pretty well failed in trading equities, some big winners and big losers, but overall it was just not a successful venture at all, and I was really more on the losing end. You go through stages in your trading career where it's quite demoralizing. In any event, when the FX market at the time, 98 to 2000, 2001 was really starting to emerge. I was attracted to it for a number of reasons, just the simple reasons that we are all aware of in terms of liquidity. But what really interested me is that because knowing my personality, is the equities markets, I was extremely distracted, no focus. And when the FX market, I was able to really focus on just a couple of instruments and build a little bit more of a framework around what I was doing and be able to sort of dissect the market. And I can talk about sort of that whole process in a moment. But it just gave me, a lot more clarity on where I was going with this whole trading thing. And that was in like 98, 99. And so just really gravitated toward FX.
So what was your biggest challenge, you would say, when it came to becoming actually consistently profitable without doing those big ups and downs? What was the challenge and how did you overcome that?
When I started in FX, I started like anyone else. You'll see on my website, I've got this lecture on the trader's development model. And I was, I lived that model. So when you start out trading, for example, you go through the exploratory phase, I call it. And the exploratory phase is you'll look at what other people are doing. The market is riddled with copy me systems and people who represent themselves as, some sort of expert in some area. While they very well may be, you need to just simply extract information that you connect with and use that to integrate it into other parts of the market that makes sense. That obviously is a challenge because it's riddled with unanswered questions. You get disillusioned because you place too much emphasis as what people say as truth. While it may be truth for them, it will not be truth for you because you think completely differently than the person who is explaining maybe the concept to you or the model to you. I am absolutely against copy me systems. So if somebody's got some sort of mathematical model that says trade when it crosses this and when this crosses that and that one wiggles and this one closes 4 times at this level, then you buy it, These kind of things simply cannot be copied because there's too much of a gap between the foundation, how that was created, and the actual execution process or the framework. And so if you're just going in there trying to execute, you're missing the entire foundation. So, I kind of went through all of that because it actually is just sort of a part of everyone's trading history. But I very, very, very quickly figured out that it was not a viable means to an end to solidify a good FX or trading as a sustainable career in that way. You need to be fully independent operator of your business.
So in trading and in life in general, we have a lot of people play a role in our lives and have impact on us. Now, was there a person who had a tremendous impact on you as a trader? And why and how did this person impact your life?
It actually made some progress, and I was becoming reasonably consistent back in, I guess it was, say, 2000, 2001. And reasonably consistent, but there wasn't quite enough substance there. There was an analyst that I knew in Arizona, and he said, you're very similar in your way of thinking to my colleague who is in South Africa. His name's Ari. And he says, you guys should get together. So I got together with Ari, and he's really quite ingenious, very, very, very bright man. And he just had a phenomenal, call it, way of looking at the market. His track record was established, and he was also reasonably new to the market. And so when I got together with him and his way of thinking, he exposed me to a dimension of the market that I, of course, carry with me literally every day now. But what he did and what we did together, because we eventually ended up managing funds together, we broke the market down into segments. So you've got the fundamentals. The fundamentals break down into subcomponents. And then you've got the technicals. The technicals break down into some subcomponents, the mathematical models. And what we would do is we would literally look at charts and break down charts and specific price behaviors till our eyes were literally bleeding, screaming. So, he'd say, let's break this down. And so when we get together tomorrow, let's see what the results were. And going through tons and tons and tons of charts. What it did was it brought me into understanding process as it applies to trading. So while we are breaking down all of these various aspects of the market, of course, you have parts that will have conclusive elements, some will be inconclusive, while others will be somewhere in between. So you start drawing, but everything that's inconclusive draws you to conclusions, part of the market that is conclusive. So the inconclusive supports the conclusive. So in other words, price behaviors that are invalidated, there's nothing concrete there. They actually further validate the ones that are validated, if you know what I'm saying. So it actually gives us an area that we don't want to bother with. And it helps us to narrow our focus. So he taught me, breaking down what's extremely, extremely important here is this. Everybody talks about how you have to have a trading plan, okay? Sounds simple enough, but where is your trading plan coming from? So what nobody ever talks about, ever, which is critically important, is your development plan. The only way you're going to create a trading plan is by having a proper development plan, going through the process, and the result of your development plan is going to be your trading plan. Okay, so if you just slap together call it a trading plan, where's its foundation? The foundation is in the development and the internalization of all the elements of the market that you have narrowed down to one specific space that you own in the market, your trading plan, but it needs a foundation. So what I learned from Ari is something that I already knew and had applied in sport, like to the highest level of detail, that I didn't know that I already knew, in reality. And all I did was I converted what I already knew that I had developed in sport and converted it over into trading, but of course just learning a new space. And I believe that everybody who gets into trading has already gone through a process where they have started at ground zero and developed into a skill or converted a gift into a skill that has been productive. So we've all been through it, just a matter of understanding the correlation between the two. And so this mentor really pulled everything together for me. And by the process of studying so many areas of the market and specific price behaviors, then it narrows down, and all you need to do, you don't need to trade 20 currency pairs or 10 currency pairs. All you need is to focus in on your area of specialty and own your space in the market. Running around making all kinds of trades in different currency pairs is not going to make you more profitable. Making more trades is not going to make you profitable. If you can't make one trade a week consistently successful, you're not going to make 40 trades a week consistently successful, because you're actually diluting the probability, diminishing probability by making more trades. Trading development plan and process thinking does is it refines all of that, and it narrows the band of your errors of burning up accounts, and it also helps you to understand that accounts should be slow and steady with low volatility. Continue to apply, and I also teach how that process and development plan should be created and executed.
Would you mind talking a bit more about the development plan? As do you have some tips for the listeners? How can they actually come up with a development plan for themselves?
Yeah, I think that a lot of traders, they just they'll take on a copy me system and they'll just sit in front of the computer and wait for something to happen. It is time very underutilized. With what we do, like in ProTraders Club, for example, is we will build a development framework, and it is structured based on exercise. Because we're price action or price behavior traders, we trade based on price delivery based on what we understand about price delivery through the interbank system. We are focusing on specific things. So what we do is, rather than just sitting at your computer doing nothing, waiting for one mathematical number to cross another mathematical number, or the market to do 3 tricks before you buy or sell, what we do is we sit in front of the computer and we're literally interacting with price behavior throughout whatever designated period you put yourself in front of the computer, because some people only have 1 hour a day, some people have 12 hours a day. And so you actually are executing and interacting with the market in a manner that has structure. So everything has a starting point, a duration, and an ending point. And based on that experience, you are going to internalize the behavior simply because it has structure. So it has reasons why you did things, and it also has framework around what you're observing price behavior, is likely or unlikely to do at certain points. So by the fact that you've interacted with it, you will internalize it. So over time, when you do 50, 100, 200, 500 sample sizes of a specific price behavior, you are now connected with the market, and the market is literally slowly starting to live within you. Okay, it's actually growing within you, so that your trading persona is not, okay, this is what the market is doing now, therefore I do this. Rather, the market is actually living inside of you. Okay, I've seen this behavior 1,000 times. Here's typically what we can anticipate from it while maintaining an objective view, and you simply respond accordingly. So it becomes very process-oriented. So you're actually internalizing, you're becoming a part of the market over time, but it's only going to happen if you have a structured approach so that every outcome has some definition to it, okay? And really critically important, and that's a step that very few people plan for. If you spend enough time in front of the market, it may occur naturally, but very, very few people ever actually plan for it. And so our most successful traders have gone through this process.
I agree with that, Chris. There's more experience in the hindsight for me. At the time, I did not know of this process. You were one of my first people that I actually learned trading from. Yes. So I really liked your system. But at the time, I think we had not talked about development process, yes. Or at least somehow it had escaped me.
Yes.
Yes. So I did not go through that process, and I learned it the hard way, and it came from spending hours upon hours in front of charts. That you need to bring that structure to the trading. And it's interesting now, I am 100% with you. Like, I'm all about structure now. I'm a rebellious person, so putting structure for me and discipline for me was the hardest thing to do. But now I am totally with you on that. I feel you have to have a structure around even the learning process, like the development plan that you talk about.
Yes.
Thank you so much for sharing that with us.
It's interesting you say that because at the earlier stages, I started getting into some education because I needed a social outlet because it's so, trading is a very secluded business, and as a social outlet, I started in education, and some of the earlier stuff we came out with in education is fairly weak. And then I didn't really talk a lot about this kind of detail. It has now been integrated into sort of the education, but I didn't really get into it much back then, which is kind of a failure on my part, more an oversight on my part. But as you evolve, you start to bring in the more important stuff.
Yeah, I think that part is very important. Like, I'm glad you have included that, because I think that seems to be, even now, that seems to be missing from a lot of the courses that are available out there. Mm-hmm. Actually, I attended one of your workshops, and you had that there, so I did go back and do all of that.
Yes.
So now let's switch gears a bit. Was there a particular aha moment in your trading journey where you thought, okay, things finally clicked together?
For some reason, I'll never forget this one particular moment, and that is, back in 2001, dollar Swiss was traded. Back then, dollar Swiss had really, really sweet volatility, and it was really one of the go-to currency pairs to trade just because of the nature of its volatility and its kind of market relationships, and just highly, highly consistent with certain patterns. And it was sitting up in a range, I don't know, like 165, 166 or something. And I had like some levels marked, and I had this one level mark, okay, if it gets up to this level, 65.30 or something, I'm going to sell it. And it was one of those days where you think like nothing's going to happen, but so you're just at the computer, you're like, oh, nothing's going to happen. At the time, you got these chat rooms, and people like to be in chat rooms and whatnot. And I'm in this chat room for whatever reason. I actually hate to admit that, because I think I think chat rooms can be a bit of a waste of time. They really are quite time consuming and they can distract you. So what happened was I was in this chat room thinking, nothing's going to happen today and just kind of goofing off, I guess. And then in the meantime, while I'm not looking at my chart, price spikes right into my level. It hits the level and it moves off that level very, very nicely in a manner that we would typically come to anticipate. And there was two things that struck me on that day. One was, when you go in these chat rooms, I think it can create a lot of confusion for people because you have you may be in a chat room and you actually think that other people are smarter than you for some reason because either they're giving off that impression or whatever. And you never really know these people's history. And so two things was, number one, of course, we all know that you just never know what the market's going to do. And don't ever just go in front of your computer and think like nothing's going to happen. We look at things differently now in terms of what's at state of liquidity, but that can also change fairly quickly. And also the market volatility is a function of liquidity. So the aha moment was independent thinking. Number one, you never really know what can happen in the market, and price because you might think that there's no setup, then all of a sudden, before you know it, there's like a perfect setup, far beyond what you had anticipated. And the other was independent thinking. And I remember when I was looking at those levels and I was observing what people were doing in the chat room or saying in the chat room, and it was the position that I was looking at was quite in opposition to what the general discussion point was. Although I wasn't prepared to take the trade, I still remember the impact that it had, the move had, and that was independent thinking. And so what's important about this point is that you will find that once you've developed your knowledge base and you've narrowed down the specifics of your trading model to such a degree that you only use other people as resources, so maybe like a service or for resources, but the point at which your trading is going to really emerge as that to a point where you have control over it is when you become an independent thinker, trusting wholly on your knowledge of your framework of your trading model. And that is when your trading is going to go through the roof and you're going to be able to be sustainable as a trader. Independent thinking, but you need to build that knowledge base up to get to that point. And do not allow others to distract you from how you're seeing the market. So, for example, if you're wanting to go short a position, don't let 5 other people who are telling you they're long and that this currency pair is going up dissuade you from deviating from the framework that you have developed, because you've probably taken more time out and have a deeper understanding of your framework than anybody else does. I assure you 100%.
Is there a successful habit that you believe has contributed to your trading success?
If you don't mind me bringing in sport again, basically when we went on World Cup circuit, we had races every Saturday, Sunday, 2-man Saturday, 4-man on Sunday. And so when I started out the week, I knew exactly where my mind should be, exactly how I wanted to approach the week in terms of each 2-man training, who was going to be the brakeman, how we were going to execute that day, what runner blades we were going to use, all of the little details, so everything. So when you take your first run, you establish your initial reference point. Okay, here's where we're at. All right, this is what I need to clean up. And this is how we're going to refine things before we go into the race. And my mind needed to be in a certain state, literally hour to hour throughout the entire week. The night before the race, I needed to be thinking about certain things, about the rhythm of the track, about details. And the closer you get to the race, the more heavy you get into the details. Literally, and then once you start you wake up in the morning of the race, literally, it still is going from like now into 15, 30-minute chunks. The closer you get to the race, it's getting into minute by minute in terms of exactly where your state of mind should be, and focusing and being 100% clear on exactly how you're going to execute. If there is any doubt or uncertainty in how you're going to execute, you are highly, highly likely to make mistakes. So what I'm saying here is this is called process thinking. And so I had a very, very clear process on exactly how I was going to execute, literally, day to day, hour to hour, minute to minute, race to race. And so being clear in that process thinking is really what is going to keep you consistent with what you do. So the more clear you are, then the more you're going to have the capacity to adapt to environmental changes. So just like in a race, you can have hold on the track because there's a crash or weather changes or a crewman gets injured or whatever. You have the ability to adapt the more clear you are in exactly where you are. So just like when you're trading, you'll be tightly connected with the market behaviors from a macro fundamental standpoint to a medium term standpoint to literally tick for tick price behaviors. And so the more connected you are, the greater your ability to adapt to changes in volatility, because we as price action traders have a much higher capacity to adapt much more quickly to changes in volatility, whereas mathematical models are way behind. They're going to take a whooping before they figure out that volatility has changed. So process thinking is really the critical part of is really, again, the framework for the routine.
Now, is there a book or a resource that you personally have found helpful that you would recommend to our listeners?
I think, a lot of trading books, I started reading them and then I trashed them. Actually, not even that many. I've hardly read any trading books at all. But I think the Trading in the Zone by Mark Douglas gives you some good insight in terms of what to expect. I don't think it's 100% right on for everyone. So some things you don't need to let it destroy your vision or your confidence. But also depends on how you trade. So a lot of his information comes from based on how he trades. So you need to understand it within the context of how you trade. So, but I think that's a good book. And I think Van Tharp has some good books, and Steenberger has some good books. So, but a lot of them are just not good.
Now, if you could do this all over again, your trading journey, what would you do differently based on what you know today?
I think, like everyone, you want to be really clear on what's required to make it in the business, and really have someone out forthright and honest telling you what's required to make it in the business. Now, just like any parent-child relationship, the child has to go through the experiences thinking that they know better, and they know what they know, but I always say, what you don't know is risk to you. You don't know what you don't know. What you don't know is risk to you, and what you don't know is profit to you. But as a child, you go out and you're going to do your own thing anyway because you're smarter than your parents. And so you have to go through those experiences in order to build a core foundation development for you as a trader. So so you have these negatively reinforced aspects of the market. So that's the exploratory phase. But I would, if I were to do it all over again, of course, I would like to be in contact sooner with someone who can give me a solid framework. I was fortunate in that for me it happened sooner than later. So really that would be it. And anyone who comes to me and tells me that they're frustrated because they're a break-even trader, I think you are doing phenomenally well. If you're a break-even trader and you've been in it, say, a few years, I think that is remarkable because you've got that already tied up. All you need to do is make some refinements to move in the right direction.
So if somebody wanted to get in touch with you, Chris, what's the best way to reach you?
Just go to chrislaurie.com, and you can reach us through the contact page, and you can go in there and check out some of the free videos and resources and whatnot. So that chrislaurie.com is the best place to go.
Okay, great. Thank you so much, Chris, for taking the time to speak with us today and sharing your insights with us. I have a tremendous amount of respect for you. I have gone and, I started with you, but then I've gone and taken a lot of other courses and, explored, like you said, and I have come back, all the way back. So
thank you very much.
That's saying something. So I really do appreciate you taking the time and sharing everything with us.
Yeah, thank you so much. I really appreciate it.
We've been talking to Chris Laurie, who shared some golden nuggets on how you can develop as a trader and the importance of having a trading development plan to fast-track your trading career. For show notes for this episode, please visit tradingwithvenus.com podcast page, episode 6. And if you liked what you heard, be sure to leave us a positive review on iTunes. This will help the show rankings and allow us to bring some more great content to you. Thank you so very much for joining me today. I am honored that you chose to spend this time with me. Until next time, this is your show host, Raman Gill, wishing you profitable trading.
If you want consistency in your trading, we invite you to join our daily market analysis calls, where we provide the levels to find the best entries and targets on an intraday basis. For a 1-week free trial, please visit www.tradingwithvenus.com. Thanks for joining us today. With much gratitude, your show host, Raman Gill.